Hello there, fairbinaryoptions.com. This is US dollar Japanese yen that looks really bullish, and from the name or the title of this video analysis, you know by now that I'm interested into trading call options on the pair with end of week expiration date. Now it depends very much how the market will move until the FOMC, until the non-farm payrolls on Friday. But from my perspective, this move to the upside can only be a leg of a rising wedge. The rising wedge should start from here, and like any wedge, it needs to have a five-way structure or 5 legs. This would be the first wave in here. The second wave ended with a severe failure in here, the second wave. The third wave gotta go and make a new high when compared with this one, because even in a wedge we need to have overlapping. So we have something like the third wave to go into, I don't know, something like 122 or stuff like this. Then the third wave, after the third wave is completed, to have the fourth wave in the form of a contracting triangle. So this to be something like A, B, C, D, E, a small contracting triangle, and then the market to make the final and decisive fifth wave to the upside. So in terms of Elliott waves, all these legs here need to be corrective, and they should be labeled with numbers even though they are corrective. So this would be wave 1, or the first wave. This should be the second wave here. Then we have the third wave to the upside, the fourth, and the fifth. Now, staying on the long side, or still buying call options after market goes into the 122 level would be a bit risky and is not recommended. However, at current levels in here, we could only envision the upside. How about the expiration date? The expiration date here is a tricky one, because on Friday again we have the non-farm payrolls or the jobs data. Everything related to the US dollar Japanese yen goes with the jobs data in the United States. After such a rising wedge, we should look into trading put options, but not here, not now. This would be the 1, 2, 3 trend line, and this here should be the 2 to 4 trend line after the triangle is completed. So it cannot be something like this. So it should be something like this. So a lot of time needed for the fourth wave to consolidate as well. However, at current levels, we should favor call options with end of week expiration date. Now, end of week expiration date normally goes with 17 or 10 minutes past 17 on Friday. I'm talking about the GMT time, and this is what we should trade on the pair. Again, from a fundamental point of view, non-farm payroll everything is about the non-farm payrolls. From a technical point of view, everything here is about this rising wedge. In a rising wedge or in a falling wedge, as a matter of fact, all legs are being corrective. I'm talking about all these legs are only corrective waves. Thank you very much for being here. Have a great day. Bye bye.